Is global warming real? Is climate change irreversible? Why are carbon emissions still rising? Join host Dr. Alberto Troccoli, a global leader in climate science and its application to the energy sector, as he unpacks these pressing issues. Through candid conversations with leading experts, get ready to demystify climate change and explore its many layers. So, let's Climunicate!
Hello, and welcome to this new episode of Let's Climunicate podcast. I'm Alberto Troccoli, and I'm here with Sean Kidney, the founder and CEO of Climate Bonds Initiative. It's a non-governmental organization which is promoting the green bonds in general in the transition from the fossil fuel to a more renewable energy society. So welcome, Sean.
Hey, Albert. Thanks for having me.
Yeah, it's great. You were one of the lead experts in this area of investments and bonds in the green space. So it's a must to talk with you and learn more about what we can do to help and support this transition to reach the net zero 2050 targets that is talked about at the international level through the agreements, Paris Agreement, or the UEA consensus, the United Arab Emirates consensus from the COP28 last year. So we'll go through a lot of these details, but ultimately we'd like to understand how people can contribute to this transition through this financing. So before we start, though, I'd like to just fire at you 4 quick questions, if I may. And please feel free to pass if you prefer not to answer. So the first question is, by how much is, in your estimate or understanding, has the global temperature increased in the past 150 years?
Well, Albert, I'm not a climate scientist, so I can only report to you what I read as you read. And so, let's be careful. And, this world is full of people talking about crap they don't know anything about, especially climate science deniers. So I want to be careful. However, the science reports, the tracking data we see from NOAA in the US and so on, suggests that we're about 1.4 degrees warming. And according to the World Meteorological Organization, we'll reach 1.5 probably by 2027, if not 2026. And we're on track to significantly surpass that. Well, what does that mean? The outside projections of climate warming or greenhouse gas warming would have us at 3.5 degrees to 4 degrees warming by mid-century. The big uncertainty in climate science, from what I can read, as I said, I'm not a trained scientist, I just read a lot of this stuff like you, is that we have tipping points. We have various climatic factors that when something happens, a whole lot of other things happen. So, for example, the one that worries me most is the leakage of frozen methane from out of the sea of the Arctic or in the permafrost. Methane is a very potent greenhouse gas, 84 times as potent as CO2, although it does dissipate in about 15 years. But for that 15 years, whoosh, we get a lot of greenhouse gases in there if that leaks. And unfortunately, it started leaking because the Arctic's warming. The Arctic is going ice in the process of going ice-free in summer. Sometime in the next 5 or 10 years, it'll be ice-free in summer. Much warmer. Of course, the frozen methane unfreezes and bubbles up. Now, if that happens, we see a very rapid increase in GHGs in the atmosphere and then rapid climate impacts. And then that sets off other things like potentially the Amazon turning to savanna because of changing the rainfall patterns in the Amazon, the melting of the Western Arctic ice shelf, which some scientists are saying now is actually given. The only question is the timing. In other words, will it take 500 years or 100 years with significant sea level rise as a result, and so on and so on. There's all it's a complex system we live in. It's a wonder. It's an extraordinary wonder. The wonder is that the planet has managed to create this thin layer of atmosphere which supports all life on the planet, which is very thin, which also has managed so far over the last few hundred million years to maintain a relatively stable temperature zone despite the sun getting 20% hotter. Whoa! How did the Earth do that? What a clever bugger. That's what we're messing with, really, that this really tiny, thin film of stuff, which is mainly gases and moisture and so on, has supported life and has kept a temperature range sort of about 2 degrees either side of an average or a maximum 5 for hundreds of millions of years. And it's done this by doing things like growing ice caps different times, which cool the planet when it's getting too warm, or because we end up growing forests everywhere. When it gets hot, it sucks carbon out of the atmosphere, it cools the planet, etc. It's very interesting all these little aspects of the planet. And it's a nice scientist that you might know, I would call James Lovelock, who really studied this and wrote the definitive book about this, which he got convinced by a friend not to call it a very boring 2-line headline, but to change it to Gaia, G-A-I-A, which is a Roman god, a Greek god, and it's fascinating. And when you start delving into the intricacies of climate change, you realize this is all about understanding an incredibly complex form of life, meta-life, if you call it, around the planet that's evolved, which through its, I dare not say ability because it's not a sentient being, but through its mechanism of stability provides or nurtures us, as in the various species and forms of life on the planet. And I can tell you that at the moment we've been poking it. We've been poking it in a fierce kind of way, and it's reacting. And these things like methane leakage from the Arctic forms of reaction, or the 2 hurricanes we've just seen in the last 2 weeks in the Gulf of Mexico are forms of reaction. As we poke the way we poked it is by putting in a huge amount of greenhouse gases into the world in a very short period by burning a lot of rubbish, coal, for example, as well as trees, and so on. And so it's funny, it's a bit like we're adolescent kids fooling around with a bear and a stick and not really knowing what we're getting ourselves in for.
So Sean, it's almost like you've read my questions, although I didn't share them with you because basically the other 3 questions are pretty much what you covered already. I mean, they were meant to be quick fire, but it's okay. We can move actually to. So the other questions, just for completeness, were about how it's going to evolve the temperature in the next 100 years or so, or 80 years, like to 2100, and what's the role of human induced climate change. So you answered all these questions, including the percentage risk with tipping points. So you covered the 4 questions already.
Yeah, let me just add something to that answer, if I may. This growing awareness amongst the human species of cause and effect. That as we do one thing, we have certain things are beginning to happen. When it comes to the atmosphere, it's been going on for a while. I mean, the first scientist that wrote about this was in the 1850s, a woman scientist, Florence, I've forgotten the surname now. And
Eunice Newton Foote.
That's right. Thank you. My error. Just worth noting, because a lot of the science gets claimed by men. In fact, it was a woman in this case who really did publish it, which took us 100 years to realize. We have developed a lot of understanding in the last 50 years, or since the 1970s, about how this is working and what's going on. In current reading of some work the Inevitable Policy Response, a project we have some involvement in, has been doing, including monitoring the views of climate science around the world, we're getting a trickle of good news. I want to say, so the projections of extreme change have been reasonably consistent for a long time. However, over the last 10 years, there's been an enormous amount of policy advance around the world, incredible amount of policy advance. If you look on the scoreboard of what governments need to be doing, it's all lighting up green. With some extreme versions like Norway banning petrol cars from next year, or Costa Rica being entirely renewable energy, etc. But in the big economies, which is what really counts, China, the US, Japan, and Europe, a lot is actually happening. Is it enough? No, but we're making progress. So the current projections of warming by the inevitable policy response, their meta-analysis of the views of climate science around the world, is that if all the policy measures that have been announced come through, and the other policy measures that look like they're coming in by various governments come through, I think we've got a pretty good shot of limiting warming to 1.8 degrees. Now, this is incredible, because what it would mean, now this is forward projection, right? Nothing certain. We could hit by a meteorite tomorrow yet. But if it would mean that we've managed to lop a 1.5 degrees off the expected warming. And that does look like the consensus at the moment. In other words, action is working. We've got to follow through, like all of these things. So that's a very important note. And for that reason, I'm remarkably hopeful. Not that we're going to stop climate change. Just be clear, 1.5 is done. We've failed. What we're talking about is stopping catastrophic climate change, which the human species will probably not survive. And that is looking remarkably positive at the moment with a bit of follow-up do. And for listeners, that's important to note, right? This is not like nuclear disarmament in the 1960s, where many of us, well, my parents were fighting in the streets about it, or marching in the streets, and nothing ever happened. We didn't make an iota of difference. Here, we are making a difference globally. Policy change is happening. Now, those policy changes are not really policy changes in Argentina or in Mexico or in New Zealand or Australia. They're policy changes in China, US, Europe, and Japan. China last year built 239 gigawatts of renewable energy. This year, that's already up something like 20%. This is like nearly half the world's renewable energy installation. 50% of all cars sold in China this year have been electric. 50%! And so on and so on and so on. So, there's room for optimism, Albert.
Yes, there is. And I mentioned also before the agreements, the international agreements, Paris Agreement and the UA Agreement. So they are in place, although they are agreements at the stage, they're not really signed completely by all countries. And although I should also emphasize that the majority of climate scientists pretty much agree with what you say, except maybe there's large uncertainties around the tipping points and all these things. We should be clear about that as well. There's also a minority which is also presenting a different view. And actually, the reason for doing this podcast is to try to bring together the different views and trying to have a discussion around and bring all the different views to the table, because other views can also be useful, because we have to move together in this world. We have to, this is something for everybody. And ultimately, things are driven, the crunch is always the finance. The crunch is, how much is going to cost and all these things. So we know, for example, there is an estimate that from McKinsey that to go to net zero by 2050, it's going to cost around 10 trillion a year, let's say, roughly. So these are the numbers, and they are pretty large numbers. So 10 trillion is 10% of the global GDP. So huge numbers. Yeah. So people are questioning this. It's really worth. But that's why we go and discuss with you, the role of bonds, the green bonds and investment in general, and what they can do to really help the shift and move towards the net zero. So can you describe just initially to set the scene, the bonds? So bonds are long-term investments. Yeah. So that are normally taken out by institutional investors like pension funds and so on. And they kind of have a long-term vision, like 10 years or more. But we want to know from you, how do you place bonds and what roles do they have in this long-term investments?
Before I get to bonds, it is about $10 trillion a year of investment in various kinds, noting that about 2/3 that is not new. In fact, possibly more, is not new. It's recalibrating existing. Building a house, you have to build a house that's energy efficient. You're still building a house. you make us change the procurement requirements. A lot of it's along those lines. It's the same as if we discover that the house we're building is in an area where they get a lot of snow. Oh, we're going to change the roof line. That's all you're doing, right? I mean, that is not hard. In other words, you're aware of the issues involved that might impact the house operating in the future, and therefore you change your design parameters, etc., etc. So a lot of it is along those lines. Most of it can be done as investment. It's a lot of money, but if our house was burning, we would move heaven and earth to find the water to put on it or to get stuff to fix it. The world is burning. So for a lot of ordinary citizens who are aware of climate change, it's weird, isn't it? Because the house is burning and we're not getting that $10 trillion a year, which is only a small slice of capital investment globally. So I want to just leave that sitting there, that there's no reason why we can't do this, given the state of the emergency, if we understand it globally. But let's go back. Let's just step back one way. Against that, I would say the 10 trillion can be characterized not as a cost. It doesn't mean that you need a government to tax us all and raise, 10 trillion scattered around the planet and deploy it. It actually can be characterized as investment because most of what we have to do can be designed within procurement requirements. If we change the procurement requirements for the energy system, as the Chinese have been doing, we can get a lot built. We might provide subsidy. We might just make it a regulatory requirement. We might ban incandescent light bulbs. Hey, we've done that already. For example, there are things like that we can do, which will mean that the money will end up being invested in the right kind of areas. And that's the area we work in globally. There's just one other thing I would say. We're in this, I often have conversations with people who are saying, well, we've got scarce capital. How are we going to allocate it? It's a horror. I'm saying, you know what? We haven't got scarce capital. Funnily enough, the human species has been incredibly successful over the last 60, 70 years of creating large pools of capital. We are swimming in capital, institutional capital, mostly pension funds, insurance funds, sovereign wealth funds, and like. And Australia, it was Bill Kelty and Paul Keating who brought in the superannuation scheme in the late 80s that has now led to these huge pension pots that everyone has a stake in Australia. So we actually have capital. The inflows into those pools of capital continue to be very strong as more people pay money into their pension pots, as more people join around the world, as pension pots get set up in new countries. Zambia has a national public sector pension fund that has billions of dollars of assets under management. South Sudan has. This is a war zone. They've got $1 billion pension fund, etc. This is success. This is fantastic. Now we have to make sure that money is deployed in a way that can ensure the sustainability of those funds so we can pay the pensions in 5 years, 10 years, and 20 years. That's the essence of what we're doing. Most of that money, the institutional investors of the world, we call them asset owners, the people who run the pension funds, look towards safe, secure income because they need to be sure they can pay the pension when it comes due. And they've got one unusual characteristic in the current world, alas unusual. They've got a long-term focus by mandate, by fiduciary duty, by legal requirement. They are forced to look 5, 10, 20, 40 years into the future when everyone else has got caught up in 3-year, 2-year, 6-month cycles. And by everyone else, I mean members of parliament desperately trying to get elected again and again. When you in Congress in the US, they have 2-year terms. They get elected, they have to start fundraising the next morning. Poor buggers. No wonder you can't get a long-term policy out of the US. Or executives of big companies in the US who now have an extraordinary short-term view of the world most of the time because of share price fluctuations determining their employment characteristics, whether they're going to stay in the job, etc., etc. The long-term investors of the world are very important for us when we're looking at a problem of the long term. As Mark Carney called it when he was the governor of the Bank of England, the tragedy of the horizons. The long-term horizon gets lost in the hub noise bustle. If we start matching these people who are managing our money, your money, big institutional investors, pension funds and so on, pots, with long-term mandates, with a whole lot of things that they can do to improve the long-term mandate, we've got something happening that we can make happen here. They're mainly invested in bonds because they're safe, secure investments. So that's why we're in bonds, not because of the instrument, but because of the stakeholder that counts here. The people who can shift the planet are the people managing your pension fund. I mean, one of the things individuals can do is talk to their pension fund, ask them what their climate policies are, ask them how they're managing this stuff and dealing with it. And what you want to hear from a pension fund is not that they're just exiting all the brown stuff. They've sold it off some kind of private equity firm. You want to hear that they're talking to all the companies to ensure they change. We can't do without steel, unfortunately, in the society. We've got to build buildings or whatever. Steel is very high carbon. We need people to engage the steel industry to push them to shift towards green steel, which we can do. Technologically, it's there. We can create steel using renewable energy generated hydrogen as a heat source and have steel being built, which is virtually zero carbon. It's just a manufacturing process that requires some capital investment by those pension funds. So, get that conversation going, folks. Talk to your pension funds, what they can do, noting that the bulk of them are invested in bonds, which is really a promise to pay over a long period. And there's two major kinds of investments in the world. There's debt and there's equity. The debt market is about double the size of the equity market. I know all the news in the newspapers is about the S&P 500, well, which is the equity market largely. But just remember, the bond market is twice the size. Governments fund themselves in the bond market. About half of all bonds globally are from governments. We have managed to grow in the last 15 years since it began a market of thematic bonds, of basically green bonds, climate bonds, which is being used by corporates, by development banks, by governments around the world. I've got 50 governments now with sovereign green bond programs. And what are they doing? This is the essence of the bond, to answer your initial question. They're simply borrowing and promising you to put it to stuff which is addressing climate. We've got a whole protocol, a whole supervisory regime, a management regime to make sure that everyone stays in line. We've got rule sets called taxonomy of sustainable finance. In Australia, we're currently working on what will be the Australian government guidance to market that qualifies as a climate investment called the taxonomy of sustainable finance, which will come out early next year, I think, etc., etc. There's an apparatus to make this work and to keep it on track. And it's working. I mean, we've currently got about US $5 trillion outstanding in this market. I didn't say billion. I said trillion. That's bigger than the Australian economy. And it's growing. It's growing every year. But it's not enough. I would say to get to the $10 trillion that you talked about per annum, which is the correct figure, is a mixture of government outlays, of equity, of bonds, and so on. If we're doing $1 trillion of green bonds this year, there's probably another trillion which counts. We haven't been able to identify it clearly, which is cool. We don't care if they call it green or not. We just care if they are doing the job. But we're probably no more than about 20% of the way in terms of our gross financing. But we are 20% of the way. That's a hell of a lot better than it was 10 years ago. We just got to speed it up everywhere, folks. It's like the train has started moving. It's left the station. We now need to just get a bit of momentum to speed up. And that's one of the other things that gives me hope. But all it is a promise, a bond, that you borrow someone is lending you money, and in return, you are saying you're going to use it for good causes, in this case, for stuff relevant to climate.
So you mentioned some numbers. You mentioned around, let's say, 4 trillion of outstanding bonds, for green bonds or climate, without going into the details.
Keeps going up.
Even better.
Every so often my team tells me, Sean, the numbers got bigger. It's very exciting.
Excellent. And without getting bogged down on the terminology of green climate and all the rest, this is just one, just green. Let's call it green, yeah. And this is in the backdrop of around 130 trillion of outstanding bonds. Not the market, the overall market. And you said that
which funds everything from roads to water to pensions to and so on. So a large chunk of funding in the market. And of course, there's fund of debt, like during the pandemic, governments raised money to be able to deal with pandemic relief and so on, which is, in a sense, a climate resilience investment, because pandemics are a feature of climate change. You get a lot of them, they're related to the destruction of environment and so on. So investments that address those need to be understood as part of the overall mix. But yes, it's still a portion of the way. And of course, that's part of what gives me hope, because look at these piles of market that we can green. We can shift. It's not as if we haven't got much happening on much instruments. In fact, the biggest problem I face now is a lack of green bonds. I mean, I've got investors pouring out of my ears wanting to invest in this sort of stuff. All around the world, by the way. It's not just in Australia and Europe. It's in everywhere from Brazil to China to India. And we spend most of our time trying to encourage people to bring stuff to the market. I mean, obviously, it's got to be appropriate. It's got to be proper. It's got to actually be a suitable investment. There's the rigor involved in doing it. Otherwise, we're wasting time. But it's about getting supply going. And this is why it's growing. And it's not just growing in a piecemeal kind of fashion each year. It's growing a lot each year. That's the progress. But, like I say, that's grounds for optimism, but we do have a long way to go. And you're perfectly right. It's still a small slice. It's just that I'm still can't get over the fact that when we started, it was like 1/10 of a percent.
Right. Yeah. No. It's very promising. Of course. I mean, it's good to hear. But I wanted also to, and we want to get also to the understanding of where the blocks are now, why this is not growing faster, what the limitation. But let's looking again at the size of the market, and you mentioned that the debt is about half of the equity market. So how did we get to this stage? So just looking also at the mix of electricity, and renewables now globally contributes around 30% of the electricity generation. So can you help us understand how we got here in terms of investments? What's been the contribution of bonds? What's been the contribution of the more standard investors, like capital investors, venture capitalists, and so on? So just to understand how this shift is evolving and what more can be done to, from a investor point of view, to contribute and support this.
So the point of green bonds is not to create a new instrument that will magically attract more projects. That's part of it. It's actually to prove that investors want to move. Change happens through governments, through states, through us acting together as governments, as the community, as a city at a provincial level or whatever it might be. And policy change is obviously the key thing. But really what we've got to do is to show a path for our leaders how to do this and finance it. And what we're doing, the green bond, the sort of meta project here, is a proof of concept that if you do some fiscally efficient stuff, like banning, you get us some light bulbs, the money will flow in the right direction. Here's a bunch of guide rails to do. So I've got no end of investors now that I can take, and I did this in Australia and Canberra recently, who will meet government officials to talk to them about the kinds of policy things they'd like to see changed, which would allow them to invest in a lot more green stuff. So the green bonds becomes a kind of KPI as well as a liberator of thinking rather than necessarily the bulldozer itself, if you see what I mean. So the fact you can do a green bond doesn't mean you're going to do 5 times as many wind farms. The fact you do it might reduce the cost of capital and might get you more capital, which might help you do twice as many wind farms, but the 5 times is going to come from better energy policy or grids. In a lot of countries now, just in energy, which is only one slice of our climate solutions, to be careful, but the first and most important slice. the specific energy transition challenge we have now is about transmission grids. It wasn't the case 5 to 10 years ago when we were on a much smaller scale. But now when you integrate renewables all around the world faster, we have renewables being built in China, in the US, in Australia that are not connected to the grid because the incentives have worked, but we haven't done the infrastructure work. So renewable transmission line investments is a critical climate change investment this year. And if we make quick progress in that, like in Japan, for example, if we can make progress on I think it's about $40 billion grid investments that are required to sort of think grid in Japan, we can then quickly integrate solar in Kyushu and wind in Hokkaido, which allow a much more rapid change in the energy system. And that story gets replicated everywhere. Now, a bond's not going to change that. The bond market's not going to change that. It is going to increase appetite by investors because they can sort of see the opportunities to invest in safe, secure investments. Transmission lines are pretty safe, secure because they're monopoly kind of investments. And so they're going to queue up and say to the government, get your act together. And the government's going to say, oh, I've got investors queuing for this and stuff. Hey, I could do this, etc. And that's really how the stuff is working. And it is working. It is astounding the number of times now we talk with governments around the world about policy settings to mobilise more capital. Most governments, there aren't that many Greg Abbotts and Ron DeSantis in the world, most governments actually want to do something about climate change. They're constrained by short-term challenges. Inflation's up. What do we do? Freak out, etc., etc. And for most citizens, while we're concerned about climate change, we have to make sure we've got food on the table for the kids in the morning. We've got to make sure we've got a job. All of these things are material. So it's a tricky balancing act. It's a very, a politician's life, at least a committed politicians, of which the majority are, is actually really hard. And they don't have PhDs in how to run governments. Those things are quite scarce. So we're trying to give them things they can do to raise capital, to do green bonds, to finance stuff is an indicator of the underlying policy change. So when you start looking at the policy changes that are important to the investors, the asset owners that I mentioned, who own everything, by the way, there's $130 trillion in these folks around the world. It's a lot bigger than the US economy, which is about 28 trillion at the moment, GDP. What concerns is, can we build investments that are green, because they're all worried about climate change, that give them a safe return? Now, what do they look like? Well, it means if you're doing green hydrogen, which is one of the things we've got to do a lot of in the next few years to be able to shift our fertilizer industry from using gas to becoming renewable energy hydrogen users, so we can have fertilizer that's not contributing to greenhouse gas in the atmosphere, for example, or shifting our ships that are moving cuddly padded bears from China to Australia to using zero carbon fuel rather than incredibly dirty fuel. All of these things require a lot of green hydrogen. We've got to generate that. So governments have a role in that particular area in managing large-scale offtake agreements. Knowing that capital is interested in 20-year agreements, how can they engineer, including working with multiple companies, large-scale contracts of green hydrogen to ensure supply for 20 years and create suitable investments for our pension funds? Hey, sounds simple, doesn't it? Well, in a way it is. I mean, of course, getting all those people in the same room to come up with agreement is hard, but that's what governments, that's what politicians are for. That's their superpower, if you like. In every sector, we've got this. Take aviation. It's an incredibly polluting industry, but we need aviation. In 1948 and 47, the Bretton Woods Agreement, setting up the World Bank and the IMF, made a deliberate policy decision not to impose global taxes on aviation fuel, because they felt that if people travel more, they're less likely to start wars. If you go to Indonesia or you go to China and understand the place, they're real people. They're people like us. We've got to find a way to work together. Kind of idea. You know what? It was a significant contributor to the longest period of relative peace, relative, there are still wars, in global history. So I'm very sympathetic to that argument. But so we need aviation. We could actually make changes to aviation quite quickly There's a scope of battery-operated craft and hydrogen-operated craft, which are, by the way, viable and working now, but they cost more. There's all blah, blah, blah. We could, in the meantime, shift to sustainable aviation fuels very quickly. There's actually a bunch of things we do. Just the sugarcane industry in Brazil could produce enough aviation fuel, bioaviation fuel, to power half the world's planes, especially as they're no longer putting ethanol in cars so much because they're all going electric really fast in Brazil. But how do you get this going? It's a chicken and egg, right? We've got the opportunity there. So, well, there's a simple way to do it. You engineer long-term purchase agreements. If you could get together a few contracts of a few airlines together, you would have a larger thing to build the plants in Brazil or in other countries around the world to use the feedstock. We need to have some really strong feedstock management regimes so we don't get governments incentivized to put corn or rice into aviation fuel. It will be a disaster. We can't accomplish our fuel. This is a government responsibility and so on. It's going to be governments work together around the world. But the prize, we could shift the global aviation fleet from about 1% biofuels now to closer to 80 or 90% in 10 to 12 years. That's what I think is possible if we collaborate together. That's what governments could do. It won't necessarily cost taxpayer money. It is in some places. The European Commission is providing some subsidies at the moment, but that's not what the industry wants. Industry wants contracts to justify building plants. We can do it. So green bonds, long-term investments, investors saying they want to invest in this and stuff, gets people thinking. And we do see a lot of people starting to think about innovative solutions. In the fertilizer industry, like I said before, the International Fertilizer Association is now totally focused on how to green the supply chain. This is fantastic for a farmer in Coonabarabran because the fertilizer they buy within the next few years will move from being quite high carbon to become zero carbon. Yes! Green bonds are part of that.
So going back a little to the actual structure of these bonds, the green bonds. Now, so for someone to prefer an investment of green bonds versus a more traditional investment on, let's say, even fossil fuel-based investment, there must be some, a difference in the return that they get. Sometimes it's referred also, greenium, you get the green bonds are accepted because, you buy green. And so you are also accept that you get a little bit less. But there must be a differential that makes you go to the green bonds versus the traditional one. And in actual facts, looking at reports from Bloomberg, reported also by the Rent 21 report last year with figures from 2021, 2022. So they're not really super updated, but they're showing that the investment by banks are still very low. They are like 5-10% of their investments. So and even if you look at the internal investments of oil companies, Shell is probably one of the highest with around 20% of investments in their research on green kind of technologies. But they're still very low. So how do you actually incentivize people to go to green, given that there are also, all these constraints around making sure that there is a certification, that they follow the taxonomy. So all this overhead creates...
Albert, I don't think we could have stopped tobacco companies producing cigarettes by trying to stop tobacco farming or just stop the companies producing, because there's always another company stepping in. The way to deal with that is to stop demand. We had to stop the usage of tobacco. That meant laws in the buses, in restaurants, etc., and of course a lot of health support to allow people to change. We can't just say, no, you can't do it. We have to find options. And I had a bit to do with tobacco campaigns in the 1990s. It's a similar thing in fossil fuels. I don't focus too much on Shell. From an investor perspective, a lot of pension funds are invested in Shell because they've got a lot of money. They're going to put it somewhere. There are some big companies there. then engaging them to figure out how to transition their business to make sure they can stay profitable on the longer term in the context of the world economy is changing is a really worthwhile and important exercise. But the thing I really want to work on is demand, is whether Japan and China are going to import LNG over the next few years in greater quantities or start reducing, and the flow and impact to the Gorgon oil gas fields in Northern Australia, etc. That's really how we deal with things, which means we need to look at how we shift to clean energy in China. In fact, China is particularly important because it's the world's largest consumer of every sort of fossil fuel nowadays. So as China shifts to becoming a greener economy, it drastically changes global demand and therefore pricing and therefore investment. And while in the last, just take the example of Shell and oil, in the last few years, we've seen a spike in oil prices again because of the war in Ukraine. Hey, you mess up supply, you get spikes in oil prices. But something else has happened this year, which is electric vehicle sales in China have continued to climb. And as I said, they've already surpassed 50% this year. And those manufacturers, BYD sells a car in Shenzhen, a BYD electric car, for a third the price it sells in the UK, because it's got economies of scale. Those UK prices are inflated, which shows you how much lower that price can go in the UK as other companies try and compete against it. VW hasn't got hope. Well, it'll still have a role going forward, but BYD is the General Motors of the next few years, and that has flow-on effect to Australia, to India, and so on. And you can see the future when you go to a Chinese city like Hangzhou now, where the streets have gone silent. I mean, it's incredible. In Hangzhou, they've actually banned two-wheelers that are petrol. And there's a lot of two-wheelers, but they're all electric everywhere. Now, the important point about that to note is China has been responsible for the bulk and growth of oil demand over the last 20 years, which means it's been primarily responsible for the high prices when we have them. According to the International Energy Agency, I'm on the Finance Advisory Board, if you lock 5% off oil demand, prices collapse. So just think about the implications of electric vehicles. Cars use 40% of oil produced. Trucks and planes another 20%. That's actually, the International Energy Agency put out a report just a few weeks ago saying they expect wholesale, they didn't use the word bankruptcies, but they said economic disruption in the oil industry by 2030 because that change. That's what's going to change Shell, right? So yes, promoting the right kind of solutions. And governments can do stuff like this. Norway is a country like New Zealand. It has very long roads, a lot of driving between petrol stations, but it is banning petrol cars from this coming year, and announced it 5 years ago. Last year in Norway, 96% of all cars sold were electric or plug-in electric. Plug-in electric is only 6%, so 90% were electric. And you can sort of see how this can change. I mean, just take that figure you mentioned, about 30% of electricity generation globally was renewable. What you may not know is that last year, nearly 95% of all investment in electricity generation was renewable. Whoa! It's game over. It's happening before our very eyes.
Yes, that's true. Although we should also say that China, whilst driving the change to more renewables, they are still building new coal-fired plants as we speak. And
look, it's a real challenge. I mean, part of that, by the way, was climate impact. Since when Sichuan, China has gone through banning coal, opening back and forth. The specific problem was Sichuan, year before last, had extraordinary 50 degrees Celsius heat. And the Three Gorges Dam, which powered most of Sichuan, was down to 8%. So they didn't have any power generation. Air conditioning went nuts. They're in the middle of COVID. People queuing in the streets for COVID injections, and vaccinations and they were dying in the street because of the, let's call it, foolish party officials insisting you had to get your injection no matter what the heat, etc., etc. The government decided they can never not have power. So they said, do something. And the provincial officials do what they normally do, which is do what they know. And that's build coal-fired. Now, the true story is that we actually had a lot of renewable energy in Sichuan and places like that was not yet connected to the grid. If China grid had done its job properly, we wouldn't need to build those coal-fired power stations. But shit happens. But what is happening in China is the government has started now banning coal-fired power stations and shifting coal to backup. This is really new. That is, they're saying, okay, we're not going to use coal as baseload and have it turning all the time. We're going to say we're going to start up and close down coal as long as the renewable keeps going all the time. You can see how it's shifting actually quite quickly. We don't get this in the Western reporting. But now, is it enough? No. Is it incredible? Yes. Given the scale of China's economy and the manufacturing hub of the world, then you can sort of see why they want to keep the lights on. Jobs, food on the table, all that sort of stuff. Could they do it better? Yes. Are they giving it a shot? Yes. So we've got to help them. And, green bonds is part of showing how they can get preferential money. China, by the way, is the world's largest green bond market because the central government authorities have been doing everything they can to try and grow finance that supports the change while they figure out what to do with the energy system, etc., etc. And the car system they're making progress on.
So yeah, you are showing, the role of the bonds on this long-term plan whilst we are still bickering and fighting over the short-term investment and whether, we haven't gone into the details, for example, how much is the difference between the return on green bond compared to a more traditional fossil fuel-based bond, because if you get, I don't know, a return of 5%, just to say, with green bonds and 8% with the oil-based bond or petrol, fossil fuel bond, why should I choose the green bond now? And so that's
let me turn that around to you. Let me turn that around, Albert. I'm going to give you the opportunity to put your money in a bank term deposit. You're lucky. You managed to get a $10,000 tax rebate. So you put it in a term deposit to make sure you don't lose it, and it pays 3% interest for 6 months. But I'm going to give you a second option. You're going to put in a term deposit in the bank, the same risk for 3 months, same interest rate. But the second one, the bank's going to promise to only use that money for renewable energy investments. And you're writing about climate change. What are you going to choose? That's how it works. There is a lot more money stacked up wanting to go green from an issuer, from a company's point of view. I want to raise some money. I want to raise $500 million for a whole lot of capital investment. I seem to have a whole lot more money over here that wants green. So I think, especially if I've issued it, but happens every time someone starts issuing, they realize there is so much interest, and investors are so keen that they look for other stuff that qualifies. The treasuries of the world, not the climate change or sustainability people, the treasuries of the world have become the advocates for doing more climate stuff because it's easier to raise money. A couple of days ago, I was on a panel with a guy who was a treasurer of Hydro One, a big electricity generation company in Ontario. They'd done $5 billion of green bonds. He says that the green bond program gave them a better price benefit, gave them a lot more investors, and they attracted more equity investors because they're running a green bond program. The number of stock exchange investors coming from green funds in Europe has ballooned. It's at 40% of their investor base. It has a flow-on effect across the whole engagement thing. That's why governments do it, why corporations do it. There's all these advantages for doing this. So you don't need a huge price difference. I mean, it's wrong to start price difference. Investor engagement, great access to capital is way more important for most people, and you get a bit of price difference to sweeten the pot. That's how it works.
Okay, that's very useful to know, and that will help also, frame better the investments when we approach them. But can you also briefly tell us how we ensure? Because we said you spent a lot of time on the defining the taxonomy of these investments and the certification. Also, how do we ensure that we avoid greenwashing in this type of investment?
So what we've done here, and the way we've done this, is we've actively promoted the idea that there are positive investments that can be made that address climate change. We've turned the idea of investing in climate solutions from being a negative, from it costs more, which is the narrative, right? $10 billion cost. Sounds like it's going to cost more. It's going to lose money, to something that actually is a positive investment. Green bonds perform better. These kinds of investments are lower risk going forward. So that's one of the reasons why investors demand keeps building better. And we've done that by making sure the market is trustworthy. So we've done that through reporting and transparency protocols, initially voluntary and now becoming regulatory in many countries like China and in Europe. We've done it by really working hard on what qualifies. Started off with us as an NGO, aggressively talking about what qualifies and what doesn't, and has now become a creature of governments. We came up with something called a taxonomy of sustainable finance in 2012, got adopted by the Chinese government, by the European Commission, and now 40 countries around. Canada launched theirs 2 days ago, which are science-based definitions of a shopping list in the future. They're not what the government thinks it can do without upsetting anyone. That's a different thing. That's what the National Climate Change Plan usually is. They're actually, this is a constant fight that we're working on, but we largely get people to say this is just about labeling stuff that's consistent with the IPCC report, Intergovernmental Climate Change report, and it's working. And this is leading to trust and confidence and value. Greenwashing in the green bond market hardly ever exists. Where you get greenwashing is the green loan market, which is bilateral arrangements between banks or private lenders and companies where they get a press release. That's all they really get. We get a loan. Isn't it cool? And then there's no follow-up, and no, because it's all opaque and it's just a two-way agreement. The public markets, we've done a fantastic job of scrutiny, and now regulators like ASIC are coming in behind us to build that scrutiny. So we're doing quite well in that area, and that's one of the reasons it grows. The markets that aren't so scrutinized are flailing a bit because lack of confidence, because lack of trust. And trust is everything in financial markets. People don't realize this, but the rigor of the boundary helps increase the value of the market. So, look, all I'm going to say is a contribution to the solution. At the end of the day, governments have to act. They have to act in ways they can ensure people can put food on the table for the kids this week, whilst also addressing long-term problems. This is the art, the challenge, the difficulty of government. But this is it. This is the test of our species. This is exactly how these governments have to act. And what we try to do is to create a wall of support for them, to mobilize the vast pools of money to stand beside government and say, you know what, you get this stuff done, we're going to invest in this because we think this is going to get better returns for our beneficiaries over 20 and 40 years' time. We're going to ensure that our savings are eroded by climate disaster going forward. That's really what we're doing, and that's really beginning to work. It's kind of exciting. But I will say to your listeners, do talk to your pension fund. It's a hassle, right? But when you send an email off to your pension fund and say, can you tell me about your current policy and how you're making sure people act to make sure my pension is safe in the long run? That's all. Simple question. Make them know that you're at least listening and watching.
Sean, this has been fantastic, and thank you so much for helping us unpack all these issues around finance. And of course, you just mentioned pensions. Pensions is something that is relevant to everybody. So everybody should be concerned about this. Everybody should take action. And like you say, get informed about how their money, your money is invested. So thank you once again, Sean. It's been great speaking with you and learning all your knowledge around finance and green bonds. Thank you.
Thank you, Albert, for the time. And thanks for doing this podcast.
If you enjoyed this episode, I encourage you to explore our other interviews and subscribe to our channel to receive notifications about future episodes, which we plan to release weekly.